I noticed there, Mark, you mentioned that MTD will apply to buy-to-let landlords also. So I've just bought a buy-to-let property. In all honesty, I haven't been unsure as to what tax I'll be liable for on the buy-to-let. Can you sort of help me with my understanding there?
Yes, I didn't cover just now, but if you're a buy-to-let landlord with rental income over £10,000, you will also have to make these making tax digital quarterly returns with the one following the end of the year as well. If your buy-to-let income is less than £10,000, that doesn't mean you don't have to pay tax. It fully does. If you have a if you as an individual have just bought a buy-to-let property, then you're going to have rental income. You will let that property out and you will have income. You'll also have costs. You will have possibly letting and management agent fees. You'll have repairs. You'll have landlord insurance. You may also have mortgage interest if you've used a loan to buy the property with. What you currently do is certainly up to the 5th of April 17, if you are a taxpayer and you have a buy-to-let property, you have to let HMRC know that you have a buy-to-let property. If you don't already do a self-assessment tax return, they will issue one to you so that you can report this income. Currently, you have your income, rental income, less any allowable property expenditure for the letting. As I said before, that will be letting agents fees, management agent fees, property repairs, landlord insurance, and currently mortgage interest for the loan that you use to buy the property with, and that will give you a rental property. That rental property goes on your self-assessment tax return, and you pay income tax at your marginal rate of tax on it. So if you're a basic rate taxpayer, you pay 20%. If you're a higher rate taxpayer, you pay 40%. And if you're an additional rate taxpayer, you pay 45% on those profits as income tax. Now, going forward, there's two things we need to consider. We need to consider how the interest deduction is going to be treated. And we need to consider making tax digital. Going forward, it will be from the 5th of April 19, because buy-to-let landlords, most of them will have income less than 85,000, so most of them will come into making tax digital from the 5th of April 19. They will need to do these quarterly returns. Now, that means you need either a spreadsheet linked into the revenue software or a spreadsheet linked into your accountant software, or you'll buy a commercial package yourself and you'll do it. You could put the rental straight into the software. You could do an Excel spreadsheet as long as you put the quarterly totals in. There will be a digital software solution that actually won't be too difficult, but it needs to be addressed. You need to know that that's what you've got to do from 2 years from now. Now, at the same time that we've got the making tax digital, you've also got to think about the mortgage interest, because currently, if you're a higher rate taxpayer or an additional rate taxpayer, you deduct the mortgage interest off your rental income. You basically get relief at higher rate or additional rate tax. Again, I think it was in 2015 budget, George Osborne decided to limit the tax relief to basic rate. So an adjustment has to be made. It's been phased in from this tax year over the next 4 years. But in 5 years' time, you will only get a 20% deduction if you're a higher rate taxpayer or an additional rate taxpayer. But the key thing to realise, if you've just bought a buy-to-let property, then you need to inform HMRC or your accountant that you have a buy-to-let property, so that they know that you need to put it on your self-assessment tax return, and then you need to put it on your tax return. If you fail to put the income on your tax return, that is tax evasion and is a criminal offence. Okay. Now, over the years, HMRC suspect there are many buy-to-let landlords out there through either ignorance or, on purpose evasion, have not declared that income. Yeah. HMRC are always improving and putting resource in to catching tax evaders. They have powers to go to letting agents, to go to banks, asking, give me a list of your landlords, to the letting agents, going to the bank and saying, give me a list of your customers who have buy-to-let mortgages. They have the power to get that information. With more and more, very sort of high-powered computer programs and software that the revenue have. They don't need tax inspectors to try and match the names they're given of buy-to-let landlords to tax returns. They will have computer programs to do that.
Yeah.
So there is ever higher risk of chance of being caught by HMRC if you have a buy-to-let property that you have not disclosed. Now, HMRC try to use a carrot and stick approach. They have a current disclosure option for people who have not paid their tax on their buy-to-lets. So it's an unprompted voluntary disclosure that you can make under their Let Property campaign to basically come clean with HMRC.
Right.
They go back 20 years. You have to disclose any undisclosed property rental income that you have not disclosed on the tax return over the last 20 years. Hopefully most taxpayers haven't been sort of disclosing for that long.
Yeah.
You have to calculate the tax and then inform HMRC what your tax liabilities are, giving them full details. If you do that, then it is virtually unheard of, as long as you give full correct disclosure, it is virtually unheard of that they prosecute.
Okay.
They may levy penalties. Under the penalty regime, HMRC have the power to levy penalties between 0% and 200% of the tax due.
Okay.
Under sort of a disclosure regime like this, where you've gone to the revenue, average penalties will be probably in the region from 0 to 20%.
Right. Yeah.
You'll have to pay interest on late payment of tax, but it really is a get out of jail card. If there are people out there who have not disclosed, I strongly advise they go to an accountant and say, can I take advantage of the revenues disclosure scheme for let property?
Yeah.
Hopefully you have a very good property. It goes up, you get good rental yields, and in 10 years' time, also its capital value has increased, and you sell that property. Partly because you might be buying a new one, maybe you want to just cash in and put that equity into some other form of investment. As an investor in an investment property, which is what a buy-to-let is, that capital gain on the sale is accessible to capital gains tax. Okay. And again, it would have to go onto a tax return, and you would pay tax at a rate of 18% or 28%, depending on whether you are a basic rate taxpayer or a higher or additional rate taxpayer. So the key message out there, if you've got a buy-to-let property, be aware of the changes on the deduction for loan interest and mortgage interest. Be aware that Making Tax Digital is coming in 2 years' time. If you haven't disclosed income to the HMRC, do so under the voluntary disclosure procedure that they have. And remember, if you sell the property, you're assessable on the capital gains tax.
Great. Well, thank you very much for that, Mark. Very insightful. And with things like Brexit and latest developments on that, and Making Tax Digital, am I right in saying I can visit your website for news, information, blogs, that kind of thing?
Absolutely. Our website has a lot of information to clients and non-clients alike. There are certain guides that you have to sign up to the website, but again, you don't have to be a client to do that. But there is an awful lot of information on www.hollingdalepooley.co.uk. Also, myself, my business partner Phil Barry, my manager Kerry Hopper, my tax manager Tom Ogden are always happy to answer questions on any of these topics.
Lovely, good to know. Well, thank you very much for your time, Mark. We really appreciate that.
Thank you.
You're welcome. Goodbye.
Bye.